Hello, my name is Tony Dong. I am from Vietnam. Nvidia stock has become a casino, says Citron, as target source Citron Research, noted for its frequent short-selling ideas, argues Nvidia stock has become little more than a gamble on future potential, as price targets rise by the day. Shares of Nvidia and are down 12.18, or almost 8%, at 147.76, amidst something of debate on the street as to whether the stock has become a casino, as Andrew Left of Citron Research put it in a segment on CNBC's Fast Money halftime report this afternoon. The stock has gotten a raft of price target increases in the past 48 hours. Yesterday, it was Citigroup raising its target to 180 from 145, and UBS raising from 148 to 168, and today it's Argus Research increasing to 175 from 140, and Merrill Lynch raising to 185 from 155. Argus Jim Keller, who has a buy rating on the shares, writes today that Nvidia has a clear strategy for successfully monetizing its graphics processing know-how in multiple markets, all of which are fast-growing and transformative. Keller is not concerned about the surge in the stock this year, as the fundamentals back it up. For any stock that has risen fourfold in a year, valuation must be carefully scrutinized. Valuation metrics are not getting too stretched, according to our analysis, because it does growing revenue, earnings, and cash flow much more rapidly than peers. The 2-year forward PEG ratio on forecast FY18 and FY19 earnings is about 3.5 times, which we believe is deservedly higher than the 2.5 average for the peer group of Argus-covered semiconductor companies. It does also attractive on forward-looking metrics such as discounted free cash flow valuation. We reiterate our buy rating and 12-month target price of 175 raised from 140 on DUC. Left over at Citron is not convinced, and he spoke with CNBC's Scott Wapner and Jim Cramer about how the stock has become merely a gamble, despite how much he likes Nevada. 2 years ago I said, don't look at Lambda, look at Nvidia, and you see how well that worked out, said Left, defending his prior bullish stance on Nvidia. But it gets to a point, in a matter of 2 days, where it's no longer a stock, it's a casino. Cramer countered that the shares at 130 still have a great deal of optimism. Left countered, does the stock have to go up every single day for it to be a great company? To which Cramer replied, I agree with you. It's no longer a stock, continued Left. People just got carried away, adding that Alphabet's Google put out a wonderful white paper on their PUS, a competing chip design, that could potentially take away some need for Nvidia's PUS. It's not Tesla, added Left, distinguishing Nvidia as a real company in contrast to the hype about Tesla Motors stock. It's not some dream stock, it's a real company with real earnings that is going to do real things in the future, but that still doesn't merit the current stock price, he said. Cramer offered that people are talking about how it's the next Intel, a claim that has been made repeatedly by Cramer himself. If one looks at the historical price appreciation of Intel over decades, that would put Nvidia at 10,500 in share price, he said.
Thank you for watching. For the follow-up, subscribe to the channel yourself here.
SFT, the opportunities that AI offers companies seem to be endless. For example, the autonomous car industry is in its early days with manufacturers developing and testing their own versions. But autonomous cars need AI, and therefore this new industry will become a source of growth for Nvidia as well. It is expected that autonomous cars will eventually completely take over regular cars, which indicates a tremendous increase in the demand for Nvidia's products. Because as Nvidia's management states, we continue to view AI as the only solution for autonomous driving. The nearly infinite range of road conditions, traffic patterns, and unexpected events are impossible to anticipate with hand-coded software or computer vision alone. It is expected that most software in the future will feature some part of AI in it. The company is not just sitting by and hoping that others will gain enough interest to make its products popular. The Nvidia Deep Learning Institute has plans to train 100,000 developers this year, a 1,000% LOI increase, with a dozen new self-paced and instructor-led labs. Returning value to shareholders, the recent increase in Nvidia's top line has caused its bottom line to significantly increase as well. Since FY 2017, Nvidia has managed to more than triple its net income. In the TTM, the company is starting to see increasing value. And when that happens, it is time to give something back to your shareholders. Nvidia does this in the way of dividends and share buybacks. Nvidia did not start paying out dividends until 2013. It started at 0.07 annually and has now grown to 0.56 or 0.4%. Although this percentage is quite low, we must not forget that the company only recently started its path of amazing growth. It will take a while before dividends will catch up with the share price, as this is still very much an extraordinary growth stock. Management intends to return 1.25 billion in total to shareholders over the course of FY 2018, or 1.4% of the current market. Increasing competition a possible risk. One risk for the amazing growth story is of course competition. Nvidia is currently ahead of everyone in the area of AI. But since the technology sector is a very competitive one, we have to keep checking whether Nvidia's products stay superior to that of its competitors now that AI is becoming increasingly popular. High valuation, but an amazing growth stock. While the main risk is of course seen as the high valuation this stock currently has, it is not as absurd as it might seem. The current PE of 49.9 is not even double that of the industry average of 26.1, while the company is seeing growth rates around 50% and an even better outlook. The gaming segment is expected to go ahead at a similar pace, while its AI business is expected to boom over the coming years. This is more than enough reason to justify a valuation of a P that is less than 50. Therefore, I believe that Nvidia still has upside potential and is far from overvalued. That being said, investors should realize that investing in Nvidia means investing in a growth story. The high valuations that come with this can cause risky investments. And although I believe this stock could go higher, be sure you feel comfortable with the risks. Companies with to comment on this article and other Macworld content, visit our Facebook page or our Twitter.
3,458 shares of Nvidia stock in a transaction dated Friday, March the 17th. The shares were sold at an average price of 105.32, for a total transaction of 5,630,196.56. Following the transaction, the Chief Financial Officer now directly owns 391,354 shares of the company's stock, valued at 41,217,403.28. The disclosure for this sale can be found here. Insiders have sold a total of 446,582 shares of company stock valued at 55,120,680 over the last 3 months. 5.82% of the stock is currently owned by insiders. Institutional investors have recently made changes to their positions in the stock. Proficio Capital Partners LLC boosted its stake in Nvidia by 186.1% in the first quarter. Proficio Capital Partners LLC now owns 841 shares of the computer hardware maker's stock valued at $117,000 after buying an additional 547 shares during the last quarter. Quadrant Capital Group LLC boosted its stake in Nvidia by 17.5% in the first quarter. Quadrant Capital Group LLC now owns 1,055 shares of the computer hardware maker's stock valued at $105,000 after buying an additional 157 shares during the last quarter. Coconut Grove Bank boosted its stake in Nvidia by 683.9% in the first quarter. Coconut Grove Bank now owns 1,215 shares of the computer hardware maker's stock valued at $132,000 after buying an additional 1,030.00 and gave the company a buy rating in a report on Friday, February the 10th. 6 analysts have rated the stock with a sell rating, 14 have assigned a hold rating, 18 have assigned a buy rating, and 2 have assigned a strong buy rating to the company. The stock has an average rating of hold and a consensus price target of 113.96.
In related news, FJK sold 133,542 shares of the company's stock in a transaction dated Thursday, March 30th. The stock was sold at an average price of 108.53, for a total value of $14,493,313.26. Following the completion of the sale, the executive vice president now owns 601,367 shares in the company, valued at $65,266,360.51. The transaction was disclosed in a filing with the Securities Exchange Commission, which is available at the SEC website. Also, Deborah Sjoquist sold 63,717 shares of the company's stock in a transaction dated Tuesday, May 30th. The shares were sold at an average price of $144.81, for a total value of $9,226,858.77. Following the completion of the sale, the executive vice president now owns 330,040 shares of the company's stock, valued at approximately $47,793,092.40. The disclosure for the sale can be found here. In the last 90 days, insiders have sold 446,582 shares of company stock valued at $55,120,680. 5.82% of the stock is currently owned by corporate insiders. Nvidia company profile: Nvidia Corporation focuses on personal computer PC graphics processing unit (PU), and also an artificial intelligence AI. The company operates through two segments: CPU and Tegra processor. The company's CPU product brands are aimed at specialized markets, including GeForce for gamers, Quadro for designers, Tesla and DGX for IE data scientists and big data researchers, and Grid for cloud-based visual computing users. Receive news ratings for Nvidia Co. Daily. Enter your email address below to receive a concise daily summary of the latest news and analysts' ratings for Nvidia Co. and related companies. To comment on this article and other Macworld content, visit our Facebook page or our Twitter feed.
Thank you for watching. For the follow-up, subscribe.